Establishing a very sort of firm and strong groundwork, I suppose, is probably one of the top priorities for the post-Brexit future.
Yes, we need to do all we can both now to increase trade over the next couple of years until we leave the EU, and then to be ready once we've left the EU to discuss whatever agreements we feel will lead to further liberalisation and increase our trade even more. Ofcom has said to us that they'd be only too pleased to talk to us about any kind of trade agreements as soon as they can, but they recognise that we are still members of the EU and that we won't actually be able to implement any trade agreement until after we've left the EU. But the Prime Minister's visit with the launch of the second chapter of the Golden Era, very clearly endorsed by both sides, has put us in a very good place to do that.
The trade deficit has been narrowing between the UK and China. Is it an issue for you guys? Is it something that you're focused on like the US is?
No, I don't think it is. I mean, if you look at the trade figures, in 2016, total trade between China and the UK was about 59 billion. It will be significantly higher in 2017. We have the figures so far until the end of September last year, which shows an increase of about 25% in our total trade, but an increase of 30% in our goods exports to China. And our exports to China are increasing far faster than Chinese imports to the UK. So I think we'll see the trade deficit narrow over time. We've made progress on market access for agricultural products during this visit. There's increasing demand for high-tech products, industrial products, and increasingly for services. I think an area where we have been less successful has been financial services compared to the amount of financial services we sell to the rest of the world because of the barriers. So as these barriers start to fall, we'll see an increase in financial services at the same time as an expansion of goods exports.
China has made some overtures over the past couple of months in opening up its financial markets, in allowing sort of majority ownership of brokerages and investment banks. Is that something that the UK is really pushing on? And what sort of areas are you focused on in that?
Well, we're pushing on the specifics of the implementation timetable, because although they've said that they will lift the equity caps more quickly for banks than insurance, for example, we want to know what the details are, and we're urging that they do that over a shorter time frame and issue the regulations which set out the steps that will be needed to achieve it as soon as possible. And I hope that once that's done, we will start to see British companies taking bigger stakes in Chinese financial institutions.
Sort of tangential to that is the stock connect between London and Shanghai, which has been spoken about for a long time. Where is that at, and what sort of barriers need to be overcome for that to be established?
Well, I think the regulators are still talking about how that will work, but there is support for it in China. I certainly know the Chinese investors are eager for Stock Connect to become a reality so that they can start to invest in British stocks. But I think there's a way to go before it is launched, but we hope that it will be launched in 2018.
In terms of the spillover from a potential US-China trade war, there has been some speculation that one of the things China could do would be to sort of lower the boom when it comes to access for financial companies. Is that a concern of the UK's?
Well, I think it's a concern for all of us. If there is a trade war, it will be damaging to both sides and could have knock-on harm to the rest of us. But, you know, China is an important partner, America is an important partner. We're not seeking to profit from a problem in any one of those markets. We just want trade to go ahead and difficulties to be resolved.